Welcome to this week's Crypto Roundup. In today's recap, we dive into Martin Shkreli's confession about the Trump-linked DJT token, the CFTC's investigation into Jump Crypto, the SEC concluding its Ethereum 2.0 probe, and Kraken's extortion accusations against CertiK. We also cover Nasdaq's new combined BTC ETH ETF filing, the launch of Time.Fun, Ethena's controversial tokenomics update, and the performance of the ZkSync Airdrop. Finally, we look at the SEC's pushback against Ripple's efforts to reduce its $2 billion fine. Thanks for tuning in to the weekly news recap. Let's begin. Martin Shkreli admits to creating controversial Trump-linked DJT token. You'll not want to miss the most entertaining story of the week. Martin Shkreli, the former pharmaceutical executive who was convicted of securities fraud for misleading investors, confessed to co-creating the Trump-themed DJT memecoin, sparking controversy in the crypto community. Initially denying involvement, Shkreli admitted to creating the token with Barron Trump, who is Donald Trump's son, during a widely attended X Spaces on Tuesday, following an intense investigation by blockchain sleuth ZkSync and crypto trader Gigantic Rebirth, or GCR. The drama began when the DJT token, which was rumored to be officially endorsed by the Trump family, started to gain significant attention. Shkreli initially denied any association with the token, despite evidence proving otherwise. This led to a $100 million bet by GCR, challenging the token's authenticity. GCR, a known Trump supporter, wagered that the DJT token was not officially endorsed by Donald Trump or his family. On-chain sleuth ZkSync solved the case, submitting evidence to Arkham Intelligence, who had offered a $150,000 bounty to whoever identified the token's creator. Shkreli then confessed, providing ZkSync with over 1,000 pieces of evidence that he had created the token with Barron Trump. CFTC investigates Jump Crypto amid regulatory scrutiny. On Thursday, Fortune reported that the Commodity Futures Trading Commission is investigating Jump Crypto, a division of the Chicago-based trading firm Jump. The probe focuses on the firm's trading and investing activities in the crypto sector, according to an insider. This investigation follows a series of setbacks for Jump Crypto, known for its algorithmic trading and market making in the crypto industry. Jump Crypto gained prominence in 2021, led by Kanav Korea, a former intern turned president of Jump's crypto division. The firm was a key market maker and investor in crypto projects, including Wormhole and Pyth. However, Jump faced challenges, such as a $325 million hack of Wormhole and losses from the FTX collapse. The CFTC's inquiry adds to previous regulatory attention, including SEC and Justice Department cases involving Jump's crypto dealings. SEC concludes Ethereum 2.0 investigation. In a significant development for the industry, Ethereum software firm Consensus announced that the U.S. Securities and Exchange Commission concluded its investigation into Ethereum 2.0, which refers to when the Ethereum blockchain switched from proof-of-work to proof-of-stake consensus mechanism. The decision to close the investigation marks a substantial victory for Ethereum and its supporters. Consensus revealed that the SEC's Enforcement Division notified the company of the investigation's closure, describing the outcome as a major win for developers and industry participants. The decision to close the investigation follows Consensus's letter to the SEC on June 7th, which sought clarification on Ether's status in light of the approval of spot Ether ETFs, where the funds are listed as commodity-based trust shares in the ETF issuance order. Consensus also filed a lawsuit against the SEC in April, challenging the agency's categorization of Ether as a security. The lawsuit highlighted the company's struggle for regulatory clarity, arguing that Ether should be treated as a commodity. Kraken accuses CertiK of extortion in $3 million bug exploit. Major crypto exchange Kraken has accused security firm CertiK of extortion after a bug exploit led to the withdrawal of nearly $3 million from the exchange's treasury. Kraken's chief security officer, Nick Percoco, revealed that a critical bug discovered on June 9th allowed users to artificially inflate their account balances without completing deposits. CertiK initially reported the bug and credited their account with $4. They allegedly informed two others, who then exploited the flaw further. Kraken requested the return of funds, but CertiK reportedly demanded Kraken disclose the potential impact of the bug before complying, which Percoco labeled as extortion on X. While Percoco did not initially name the security firm involved, it was revealed when CertiK defended its actions on X, stating it was given insufficient time to return the funds and accusing Kraken of threatening its employees. CertiK maintained that its actions were part of an investigation into Kraken's security vulnerabilities. Nasdaq files combined BTC ETH ETF, while Ethereum ETF issuers respond to SEC. On Tuesday, Nasdaq filed for the first combined Bitcoin and Ethereum ETF, managed by Hashdex with allocations of around 70% to Bitcoin and 30% to Ethereum, which is based on the relative free float market capitalizations of Bitcoin and Ethereum. Nate Garazzi, president of the ETF store, expects future ETFs to use similar allocation strategies, reflecting market conditions and manager preferences. These combined ETFs offer investors diversified exposure to the cryptocurrency market. Simultaneously, prospective Ethereum ETF issuers are addressing feedback from the SEC on their S1 forms, according to the block. Sources describe the comments as light and reasonable, with issuers aiming to submit revised forms by Friday. Following the approval of their 19B4 forms in May, issuers hope for the effective approval of their S1 forms soon, potentially leading to product launches by July. New social platform Time.Fun captivates crypto community. A new social platform, Time.Fun, is grabbing the attention of the crypto community. Launched on Base, a Layer 2 blockchain network incubated by Coinbase, Time.Fun has already generated over $1 million in trading volume and attracted notable figures like memecoin trader Ansem and Mert Mumtaz, who is the co-founder of Solana developer platform Helios. Time.Fun allows users to tokenize their time. According to the founder, each token represents a minute of a user's time, enabling users to trade these tokens, book one-on-one sessions, and interact with creators. Tokenizing the most valuable asset someone can own, which is their time, is the platform's core vision, they explained. Ethena updates tokenomics, mandates locking of airdropped Ethena tokens. Ethena, the synthetic dollar protocol on Ethereum, has introduced controversial changes to its governance token, Eigenlayer's tokenomics. Recipients of Eigenlayer airdrops are now required to lock up 50% of their tokens within Ethena, Pendle Finance, or generalized restaking pools. Ethena Labs explained that these changes aim to better align the use of its USD stablecoin with the Eigenlayer token. Despite the potential yields from new staking options, the forced lockup has sparked backlash. Pseudonymous user Dark Crypto Lord on X criticized the protocol, asking, "What's the point of a governance token?" While DeFi educator John Galt added that forcing holders discredits the reliability of all future Eigenlayer airdrops. Ethena responded, stating the goal is to shift Ethena holders from mercenary capital to long-term aligned users, and assured that forfeited tokens would solely benefit ecosystem-aligned users, not the team or investors. ZkSync airdrop trades below expectations as users sell off. ZkSync's highly anticipated airdrop went live on Monday, with users claiming over 2.62 billion ZK tokens worth approximately $630 million in the first 10 hours. Despite the initial excitement, the token traded below expectations, opening at around 30 cents and dropping 30% to approximately 21 cents. About 40% of the top 10,000 addresses sold their entire airdrop allocation, according to Nansen. Many crypto projects that have recently conducted airdrops have fallen victim to mercenary airdrop farming, leaving industry leaders questioning what is next for airdrops. In related news, EigenLayer initiated the second phase of its Eigen token airdrop on Wednesday, expanding the total distribution to nearly 113 million Eigen tokens, which is 6.75% of its total supply. This phase targets users who interacted with DeFi and liquid restaking token protocols before March 15th. SEC opposes Ripple's effort to reduce $2 billion fine. The SEC has pushed back against Ripple's attempts to lower a proposed $2 billion fine for selling XRP to institutional investors. The SEC argued that Ripple's comparison to a recent Terraform Labs settlement is flawed, since Terraform is bankrupt and in the process of winding down operations, while Ripple is not agreeing to any similar relief. Ripple, in its June 13th filing, argued that its fine should not exceed $10 million, citing differences in fraud allegations and penalty calculations. The SEC countered that the circumstances and financial metrics of the two cases are not directly comparable. And that's all. Thanks so much for joining us today. If you enjoyed this recap, go to unchainedcrypto.substack.com, that is unchainedcrypto.substack.com, and sign up for our free newsletter so that you can stay up to date with the latest in crypto. Unchained is produced by Laura Shin, with help from Matt Pilchard, Juan Aronovich, Megan Gavis, Pam Majumdar, and Margaret Correa. The weekly recap was written by Juan Aronovich and edited by Kari McMahon. Thanks for listening.
Unchained is now a part of the CoinDesk Podcast Network. For the latest in digital assets, check out Markets Daily, 5 days a week, with host Noel Atchison. Follow the CoinDesk Podcast Network for some of the best shows in crypto.